Today, for the Bitcoin price, Donald Trump has probably dropped the biggest inflation bomb you can imagine. Guys, we will show you exclusive footage about Donald Trump urging the Fed to do something very, very crazy. We will go into it and tell you exactly what that means for the Bitcoin price in the immediate short term and also in the mid run. We will also combine that with a very interesting on-chain metric suggesting that the price right now, immediately before the halving, is actually exactly where it is supposed to be. We will zoom out and understand the full picture for the Bitcoin price here leading into the halving and also going out of the halving event here after April, May 2020 this year. Guys, this will be jam-packed, so make sure you take a seat. Make sure you smash up the like button to at least 2,000 likes right now. And that being said, welcome crypto friends and welcome back to MMCrypto. My name is Chris, and as always, we are really pumped to go straight into the content. Okay guys, I'm going to show you the full clip here. It's a little bit more than 1 minute. Make sure you watch the whole clip through and stick until the end of the video, because we will connect all of that with an on-chain metric suggesting something very special for the Bitcoin price right now. So now stick around and listen to what they have actually said here on CNBC, and in the end you will see the very exclusive Donald Trump footage. So please lean back and listen carefully.
Have been bracing for imminent action by the Federal Reserve.
Steve Leisman joins us now with what the Fed could do at this point. Steve, importantly, when they might act and whether it would help. You've also been reporting, I should add, on some concerns, which we mentioned off the top of the program, about Goldman Sachs saying this virus could impact the American consumer more than we thought.
Yeah, that's right, Kelly. What began as a concern about supply disruptions from China has now become a worry about how the coronavirus could impact the U.S. consumer, the stalwart of the U.S. economy. Goldman Sachs writing in a note to clients this weekend, there is an increasing likelihood, quote, that shortages of consumer goods from China will weigh on the U.S. consumer spending growth in the spring. Those types of concerns have led markets to count on the Fed to cut interest rates deeply over the next several months and increasingly to forecast emergency cuts. That is, before the Fed's next scheduled meeting on March 18th. But it doesn't appear to be happening tonight from anything we can see. Pantheon writing, quote, delay is pointless at best and deeply counterproductive at worst, given the dramatic tightening of financial conditions. The market now sees the Fed bringing down its benchmark overnight lending rate by a half percentage point by or during the March meeting and by another half point throughout the year. So that would be a full 1 percentage point decline in interest rates, with some forecasts that it could even go to zero, as he has done before and throughout the crisis. The president urged the Fed yesterday to make those cuts.
Our Fed should start being a leader, not a follower. Our Fed has been a follower. We need a Fed that's going to be a leader. We should have at least the same rates and ideally lower rates than other countries. We shouldn't be paying more.
So guys, this was very interesting, because he said the Fed so far has been a follower, not a leader. What does he mean with that? So let's go into the data here of the different central banks. You know, you have the United States Federal Reserve Central Bank, you have the ECB for Europe, you have the People's Bank of China for China, and so on and so on. So let's go here into it, and you can basically see from the fully developed countries, from the really high-level countries, the top 10 in terms of GDP per capita, America, the United States of America, are by far the ones with the highest interest rate. In fact, you can see that right here, 1.75% for the United States of America. And if you compare that to Europe, for example, here, the European Central Bank interest rate, you can see we are already at 0%. Or let's go into the Swiss interest rate. If we zoom out here, and you can basically see that Switzerland is at minus 0.75%. Same for Sweden and many other countries. They are already negative. What Donald Trump suggests here, and he really urges the Fed to do that, and you can probably imagine what happens when the President of the United States urges an institution like them to do something, is that he wants the USA to be a leader, to have the same or even lower interest rates than all the competitive central banks out there. So that would mean that in a matter of a few weeks or months, the US will cut the interest rates not only as significantly as to probably 0%, most probably they will go even negative. And what we might see then is something like a race, because if the financial crisis hits because of the coronavirus or whatever. We will also see the ECB going down below 0%. Think about the People's Bank of China, what they will most probably do. They are at around 4% right now. They have a lot of room to go down, and the US has to follow. If they want to be a leader, they have to be even lower. So guys, we will probably see something like a rat race of governments, of central banks, lowering their interest rates, making money even cheaper, incentivizing people to loan out money because they have to give back less if the interest rates are negative. And what that might mean for the monetary supply and also for the purchasing power of the lower and middle classes, guys, you can only imagine what that means. Also, guys, deeply interconnected with that, because the people right now are scared AF. The Bitcoin price has been going down like crazy, and people are saying now we are reaching the $1,000 target many bears have suggested. And if we are zooming in here, we have marked this area here for you, and we want to show you that right now this retracement, and especially this retracement, is completely in alignment with what everything we have seen in the last two cycles. Because if we zoom out here, we have marked every single timing here before the halving, as you can see it right here in 2020, right here in 2016, and also back in the days right here in 2012. And if we go now here into the tweet of our friend CryptoKia here, full credits to @CryptoKia, he has been putting out an on-chain metric we are also observing on a weekly basis, and this is, look at this here, it's the coin days destroyed. And the coin days destroyed, let me read that for you quickly so you can understand it. It actually shows you if the long-term holders, the long-term investors, the smart money is holding Bitcoin right now or is dumping Bitcoin right now. Because as the price dumped recently, you might ask yourself, well, are the long-term believers going out and we see a chain reaction of the price going down afterwards, or was that only dump money dumping the price down and we are up for the races within the next few weeks? Well, let's look at this specific indicator here, and what he was saying is, are whales and long-term holders offloading their Bitcoin right now? No, because on-chain data suggests that both are still sitting firm and tight on their BTC. Recent sell-offs are on par with the prior bull markets, nothing extraordinary yet. And guys, let's look into it. He is showing here the explanation, the coin days destroyed. You can see it here on the lower price range, and the yellow price range is something like a neutral price range, whereas the green price range is the exact price range where the smart money is going in and holding, and the red price range is this area where the smart money, the long-term holders, are offloading their bags and selling onto the retail investors. And as you can see right now, we are far away from that. This data is directly pulled from the Bitcoin blockchain and is measuring what addresses are holding how many Bitcoin for how long. So whenever long-term holders are selling their Bitcoin, this average goes down significantly, and we can see this value here going into the red. If we go down here, we can see a little bit more of a very easy to understand explanation. And what he is saying here is the above mentioned metric measures the total hodl age of all Bitcoins moved in a given day by multiplying those coins with the number of days they got hodled. This metric is called the coin days destroyed. So what he is saying here, and this is the most important thing about this whole metric, if long-term holders would sell larger than usual proportions of their holdings, the supply adjusted coin days destroyed would jump up noticeably. As of now, recent sellings seem to be on par with the prior bull market sell-offs, especially when comparing it to the same periods over the same halvings. So if we go here into it and we make it a little bit bigger, you can see that right now we are here in the exact middle of the yellow price range. And you can basically see these things here, these black areas, are always a few months before the halving, leading exactly into the halving. And what you can see is that this value here, right here, also back in the days in 2012, let me show you, right here, are always approximately in the middle of the range. Then we see a massive sell-off in the halving, and we are going back down into the green area, and the long-term investors are once again buying even more Bitcoin. So right now, all the fear you can see shouldn't drive you fearful, because the long-term holders here, as you can see it directly pulled from the Bitcoin blockchain, are still believing in Bitcoin. So let's go back into the chart here, and we have marked it for you. You can see that before every single halving, that's the vertical lines here in 2012, the Bitcoin price was always very, very volatile, even going down before the halving, having another sell-off, and that was even more clear here in 2016, with a long consolidation period, a pump into the halving and then a sell-off, and the institutional or long-term holders actually buying even more Bitcoin before we were up to the races. And right now we can see the exact same thing again, not only here in the charts, but also on the on-chain metrics here, as CryptoKia actually suggested with the Coindays destroyed. Guys, first of all, we want to know from you, do you think the Bitcoin price will go down from now until the end of the year, or do you think that the halving is still a very bullish indicator for Bitcoin and that the price will go up from here at least till the end of the year? Let us know in the poll, which is popping up on top of the screen right now, and say up or down until the end of the year. We truly believe that the halving, either before, while the halving, or maybe with a delay of 1, 2, 3 months, who knows, will have a very positive impact for Bitcoin. But we want to know what you think about that, and also join the comment section down below for the discussion. However, guys, we wanted to remind you, because some people have been asking us, this bonus here for Bybit is still ongoing, $190 for free, but we want to put emphasis on that. This is only for experienced traders. If you are an experienced trader, you can click the link, it's in the pinned comment down below, and you can put in your email address and your password, and after your deposit of 0.1 Bitcoin for $100 bonus, or 0.5 Bitcoin for $190 bonus, you get the bonus within 24 hours or so for a free trade. However, even though it's free, it's only for experienced traders. And if you want to use on-chain data here, for example, for Glassnode, we talked about this metric here, the Coindays destroyed. Glassnode is offering that on their website in the free account, and you can also upgrade it to the advanced account. Also the link given down below in the pinned comment. Thank you so much for watching, guys. Make sure to smash up the like button and let us know what you think about the Fed probably lowering the interest rates way below zero. Guys, that might be interesting times coming up for now. So thank you so much for watching, and we will see each other at the next one of MMCrypto. And as always, guys, as always, bye-bye.